hope you guys are feeling well. We are going to be analyzing the markets here live while the FOMC meeting is taking place. It is not streamed live just yet, but it is about to be here very soon. We're going to be watching the Bitcoin charts. We're going to be watching the markets, and I hope you guys are feeling well and you're handling the volatility right now. So let's go, guys. So shout out to all the new members. Shout out to all the people that have been watching the live streams so far. We've been live streaming almost every single day. Actually, not almost. We have been live streaming every single day. Let me make sure that we got everything all. Music is too loud. Oh, sorry. Music too loud. You guys are the best. All right, so are we good now? We forgot to turn it down. We have a flow. Once we switch our scene, you know, we got to make sure we get the music going down low. But yes, we are going to be streaming the FOMC. So let's see what happens. Let's get this show on the road, guys. Please hit the like button. If you've been in the live streams so far at 11:30 and also at 8 p.m., you guys are the best. It's been super fun. And let me make sure we are not crooked here. I think we're good for the most part. All right, let's go. All right, guys, let's get this show on the road. All right, guys, so welcome to the show, guys. We are back again. We are streaming again for the second time today. We'll be streaming 3 times today, so we're pulling the records today because we have this Bitcoin volatile action happening. You can see there's going to be a lot of wicks. There's going to be a lot of wicks, guys. But I wonder if I could show you my latte, my heart latte. I hope you guys can just feel the love. You can almost see it. You can almost see it. We're sipping a little bit more coffee, but we're also combining that with a lot more water. But so let's see. We're probably going to be streaming this thing. This thing is going to be live at 2:30 officially. And we're going to keep track on it. Once we go live, then we will see what happens. We'll see what happens. But in the meantime, let's see what's happening with the overall market. We're going to go to danielcurtisnews.com, go to the crypto bubbles, and you can see that on the 5-minute here and on the hourly, the altcoins are getting a bit of a recovery here. So you can see that with Bitcoin doing this bounce, which could be a dead cat bounce. We'll see, because we're getting that bounce, and now now it seems like we're trading sideways on the 15-minute. And if we look at the daily, we want to look at the daily because you can see here that we had all these massive green candles to the upside from this recent support of $51,000. So this is the level. These are the levels that we're looking at here, guys, is that $51,000 level and this $53,000 level, and we need to make sure that if we're breaking down to these prices, we got to be prepared. We got to be prepared, guys. But some of the signs in the charts are looking like it could go lower, but we just don't know. We have to see what happens with this FOMC meeting. Is it priced in? We'll see. We'll just got to watch. We have to see what happens. Guys. But cheers to you. Cheers to everyone. We're normally only back at 8 o'clock, but we are back early to do this emergency live stream of the FOMC meeting. But let's go into really quick. We're going to get some live coverage. We're going to get some live coverage right now. Hold on just a second. All right, let's pull this up. This was just an hour ago. Hold on just a second. Let me get my stuff set here, and let's pull this up. We're gonna analyze this here. Let's listen. Okay.
Expected inflation readings. Can we expect the Fed's narrative to change at all during today's press conference? We want to bring in Vincent Reinhardt, Dreyfus and Mellon, a chief economist, former Fed economist as well. Vincent, it's great to have you here. So summing up the recent data prints that we have been getting out, even what we are seeing this morning. What does that tell us just about where we are in the inflation narrative and what we're likely going to hear from Powell just in terms of how sticky prices remain?
What we're likely to hear from Chair Powell is bumpy, and the only question is how many different times will he say that word? Look, the last mile in reducing inflation to the Fed's 2% goal is hard. It's taking longer than they thought, but probably not longer than history would suggest. It takes a while for prices to get back into alignment when they were dislocated so much by the pandemic disruptions and the Fed's mistake in letting inflation get embedded into the system to begin with. Just going to take a while. This time round, we want to remember that the Fed's task is to recalibrate the level of the nominal interest rate to the decline in inflation we've already seen. So it's not another 10th here or another 10th there over the next few months. Inflation's a lot lower now than it was 6 months ago, 12 months ago, 18 months ago. What they're thinking about is what real interest rate, what nominal less inflation rate to set to prolong the expansion, which is kind of getting a little rough on the edges while making that last mile to 2%.
Well, given some of the data that we got in this morning, taking that into account, I'm curious what kind of pivot you think we'll hear from the Fed today from that December pivot away from their previous kind of hawkishness. We know that Jay Powell is likely to have to pivot away from that type of thinking. Do you think that we're going to get a full U-turn? Do you think we're going to get a slight shift away? How big of a pivot do you think we'll see?
The Federal Open Market Committee is a big old oil tanker. It doesn't make sharp turns. The pilot's got to send a signal for what to do in about 3/4 of a mile. So two things about what we'll hear this afternoon. The first is what we know already. They always lean into policy action at the previous meeting because they don't want to surprise us. So we know the funds rate is going to stay unchanged at 5.25%. We also know they're going to make an announcement with regard to the slowing of the runoff of the balance sheet because they warned us at the last meeting. They got very specific in the last set of minutes. So we know what the official communication of the FOMC is. Nothing on rates, slowing on the balance sheet. The interesting question is, how true to that storyline will Chair Powell be at his press conference? As you noted in the clip you showed, Chair Powell's a little more optimistic than the rest of his colleagues. He was really hoping that disinflation was going along a path that would let the committee ease in June. If they were going to ease in June, they have some work to do in this statement because they always warn us of it. They're not going to act in June, so they don't have to do any of that work. But he may leave it on the table. He may be a little bit more optimistic in his press conference. That's the open question.
Vincent, I'm curious just to get your perspective right now, especially when it comes to the consumer, because how do you square the falling confidence, consumer confidence, what we saw in yesterday's print, with the fact that consumer spending, at least overall, we're starting to see some cracks in the consumer, maybe this earnings season, but consumer spending has remained so resilient. What does that tell you?
Big disconnect between surveys and data. And it's not just households, it's firms too. I mean, look at the ISM this morning. But also look at consumer confidence, which is much weaker than you would expect relative to what they're spending at stores and given the unemployment rate and wage growth we've seen. So households and firms are not feeling good about themselves. And I think you suggested earlier on what that's about, and that's about inflation. The ISM, for instance, prices paid really over samples on oil and other commodity prices. They've firmed up. Firms feel the pain in price setting.
Interesting. Well, let's see. Are we live yet? Nope, we got about 10 minutes here. Let's see what happens when we go live. We'll get the market scoop. We're going to get the market scoop here, guys. right, let's see how many people we have watching across all platforms here. We have, nice, we got 80 people in X right now. Let's go, let's go. We did a full flip-flop over here. We got a lot of people watching on X, and then we have about 7-8 people watching on YouTube. That's amazing, guys. So shout out to the X community. Let's go. So, and also shout out to Tom Crown. You know, we get the inspiration from Tom Crown for doing this FOMC live stream. He's been doing it, I think, for the past like 4 years or something like that. So shout out to Tom Crown. He's been very dedicated and keeping up the trend, his own cool trend. He's got an awesome community. So shout out to Tom Crown. I think he's live streaming right now. So if you want to kind of hop back and forth and check out Tom Crown's live stream and also pop in here, that would be super cool. So he says the Fed will likely keep interest rates the same today. However, traders anticipate a cut to the last quarter from 60 billion to 30 billion. Quarter tapering will likely to be seen as bullish for the risk assets such as stocks, bonds, and crypto. So put a 1 in the chat if you agree with Tom Crown on that analysis. And then we got Wendy O saying, the Bitcoin bears are back in town. The bears are back in town. Do-do-do-do-do-do-do-do-do-do. I'm sure that's how you felt this morning. You were like, oh my God, is there a bear? Like, oh my God, there's a bear in my oatmeal. Get it out. All right, so let's see. Let's see all the X peeps. Let's see all the X peeps. Let's go. Let's go and let's see. Are we on the side here? I don't see us live on X for some reason. I am not seeing it. There's probably a lot of people live right now. That's the thing. When the FOMC meeting is happening, a lot of crypto YouTubers and influencers, they go live and they try and funnel a bunch of people in. But I just asked my community, I said, yo, guys, you want me to go live while the FOMC meeting is happening and we look at the Bitcoin price here and we watch it live? And they said, let's go. So that's why we're here. That's why we're here. Normally, if you're new to the channel and you're watching this from anywhere, everywhere, wherever you are, whoever you are, welcome to the channel. We do these live streams Monday through Saturday at 11:30 Eastern Standard Time and 8 p.m. Eastern Standard Time. So then there's only one day that we do not do it at 11:30, and that is on Mondays. Because on Mondays, we do go on The Moon Show, which is on Carl Runefeld's channel, The Moon OG channel. If you guys have not been on that channel, we've been watching Carl's channel since like 2021. One of the channels that inspired us to, even go into crypto and start getting into this roller coaster, along with Ivan Onkin, all the OG channels. So we always want to give a well-deserved shout out to all those people. All right, let's see what's going on. Are we getting there? We're getting there. But what's interesting, this metric here, we go into the currency print orders, and the currency print orders contains about 5.3 to 6.9 billion notes. Okay? Now, these notes are all valued at different amounts. This value is totaled at $180.5 billion to $204.4 billion. So during this currency CY 2024 board and BEP staff will adjust production in each denomination within this range to best match available production with demand throughout the year. So this is just speculating that there's going to be a total of $204 billion injected into this. That's all it's doing is just adding to the national debt. This thing just keeps going up, and the interest that's being paid is also keeps going up as well. So these are some interesting numbers, guys. It's really getting kind of crazy, and we know that, yes, it's going to be bullish for assets and long-term holding commodity assets for this coming quarter, but we have to see what is going to play out really in the short term here, because it might be kind of bloody in the short term to get to this last quarter and see what happens in December. Because if that is the case, then we're going to get these rate cuts in December or pre-December. Then we might be in for some very volatile times when it comes to all the markets, not just the cryptocurrency markets, but all the markets, all of them. All right, so let's look at the S&P 500 and see how we closed today. Or not closed, we haven't closed yet, but see how we opened, and then let's see how we are going to close. We see you got U.S. stocks cut losses after Fed. Biotechne is the best performing stock in the S&P. Let's see. So the S&P just topped out at 5,268 on the daily. It closed on a red candle yesterday at the end of the month. So for Bitcoin, it always says in May, stay away, and then you come back partying in the summer. So let's see if that will play out. Let's see if that actually plays out. And, you know, we agree with Elliott Trades. Says crypto buy zone checklist, regulatory FUD, altcoins down, macro FUD, BTC near key support. We got the timeline being toxic as hell. What else is he missing? Is he missing anything else? I think he's got everything pretty down, nailed on the head right there. This is when you start building your bags. This is where legends are made, basically. Legends are made in these markets where we see red. Where we see red and blood, that's where the legends are made, guys. And we've been saying this, you know, look at all of these altcoins that are basically in these amazing descending wedges going to the downside, but then to bring them up into some of these key accumulation levels to be blasting once Bitcoin sees that true support. So there's a lot of these altcoins that are in these patterns, and and now we got SEG back in our accumulation range right here in 49 cents. It's just like so much potential here. So much potential on a lot of these altcoins. Floki, look, Floki, same pattern. Floki, same pattern. Yeah. It's looking good. It's looking good in terms of what the potential is for holding these things for the next run. We can't get shaken out of the market, guys. This is what this is. It's just a big shakeout. It's what we call the shakeout, guys. The big shakeout. But can we survive the shakeout? That's the question. That is the question. Can we survive the shakeout? All right. We're about 2 minutes away from the live FOMC. We're almost there. We're almost there. They always have some nice music for their wait time. Oh, are we live? Oh. All right, let's check H-bar right now. Let's check H-bar, yeah, because we saw H-bar was pumping a little bit. Let's check H-bar. H-bar on Bybit spot. Ooh, oh, might be pushing up on that 15 cents. Wow, are people hedging onto H-bar because of Bitcoin? That could be the case here. That could be the case here. Wow. Yeah, H-bar actually getting some volume here. Could we be getting some support up here to the 13-cent mark on H-bar? Wow. From where we are now, that would be a 28% move to test that resistance there. But then also, if we move up even more, that's 74% for H-bar. Wow. The RSI, though, looks like it kind of topped out a bit, so we'll see what happens with the RSI here on H-bar. But wow, that looking pretty interesting. Looking pretty interesting. All right, we're almost there, guys. We're almost there. Let's see what happens. See what old Chapow says. We can also check this Federal Reserve. We can do this on here. Oh, okay. They're getting ready. They're all getting ready. It's really, honestly, guys, if you think about it, it's really fun. It's really like so archaic. So archaic. All right, let's go. Let's go.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration.
Welcome to anyone who's popping in the channel right now.
Has eased over the past year, and the jobs to workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected, although some measures of short-term inflation expectations have increased in recent months.
Bitcoin is actually getting a nice bounce right now.
Appear to remain
We're going up on
anchored,
the band right now.
as reflected
We might be
in a
trading
broad
back up
range
to
of surveys
58,005
of
right here.
households, businesses, and forecasters,
We got to watch it,
as
though. It
well
could be
as
a
measures
massive
from
fake.
financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range of the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess. Is it?
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that, that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long
nice
as it's
bounce on
appropriate,
Pepe
and we'll
here.
do that.
Gina.
So BTC.
Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive.
Dogecoin. Look at this.
You ask what would it take?
Got right back up to
I think
13
we'd need to
cents.
see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data to answer to that question. That would include inflation,
market's pumping right now.
inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts.
We might be getting right back into the purple
our decisions
range here.
that we make on our policy rate are going to depend on
for
the
a lot of
incoming
stuff,
data,
for Bitcoin and
how
for
the outlook is
Doge.
evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So,
Glad you
for
think I'm
example,
cute.
let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts. And those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down toward 2%. And another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really
Look
it's
at
the
this,
same
guys.
question.
It's going to break this level here. Once it
I
does,
think
it's going
the
to try
data
and get to
will
the
have to answer that
618,
question for
and
us.
let's see what happens.
And
It's
can
going to
you
go.
just follow, on the path where you might not cut, is that
Everything's going up a
mentioned
little
there would
bit.
be inflation
Watch the 618 though. Watch the 618.
and is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy rection.
Watch this,
we'd want to
guys.
be confident that inflation is moving.
If we get
sustainably
supported
down
off
to 2%.
618, if 618
For sure, one of the
actually
things
gives
we'd
us
be
a
looking at
chance
is the
here,
performance
holy
of
moly,
inflation.
guys,
We'd also
then
be
man,
looking
the
at inflation
altcoins are going to rip.
expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timros from the
Wow.
Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at
Ooh,
let's look at growth.
rejected.
Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that
do I know Tom Crown? Well, I mean, I've been just, we've been talking back and forth, occasionally sometimes on Twitter. He likes my stuff. We follow each other. We've, I messaged him a long time ago and said, hey, I should get you on the channel. And I said, I need some Tom Crown TA on the channel. And he said, it's not impossible. It's not impossible. So you never know. You might see Tom Crown on the channel. We'll see. What you have to do is you have to go on Tom Crown's channel and say, hey, go on Dano Crypto's channel. And once he sees it enough, then there you go. There you go.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was
I don't know him personally.
So
but
I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year. Very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply-side distortions and demand-side distortions, and there's also monetary policy, restrictive monetary policy.
Dang shit! So look, all our coins that we've been trading are going up right now.
Continue. I wouldn't
almost
give
everything
up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also
we're gonna put in some trades.
Issues are solved. It should take some time for that to affect
we're gonna put in some trades.
Activity and ultimately inflation. So there are still those things. So I don't like to say that either strong either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Nice.
Rachel.
That's awesome.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it.
Oh, is it? Is it happening?
What we said is that we need to be more confident, and we've said, my colleagues and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path than a 2% inflation. That's the signal that we're taking.
Steve.
Yeah, Mr. Chair, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic
Yeah,
by which you expect them to work out in the coming months and quarters?
Yeah.
Oh.
So we
Oh.
will,
Oh.
we have put the thing under a microscope. I will say.
We didn't get rejected off the
nothing's gonna come out of
618, guys. That
that's
means we
gonna
were getting
change
it
the view. I
going.
think
Let's
that, in
go.
fact,
Let's go.
We didn't gain confidence in that it's going to take longer to get
Look at
to
that.
confidence, but confidence.
Wow, we're
I
going
just
right
think,
back into the purple range. What a
you know the story,
recovery.
What's happened?
Wow,
since
that
December
was,
is you've seen,
man, look at
higher
that.
Goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two
Holy
are working
moly.
together to sort of be higher than we had thought. And there are stories behind how that happened. And, you know,
Can't deny the BTC right here. Can't deny Bitcoin.
Over the course
You just
of this
can't
year,
deny it.
see inflation move back down. That's my forecast.
Wow.
I think my confidence.
Now the
in that
786 is going to be
lower
tough. That's the
than it
next.
was,
That's the next level, guys. The
because of data that we've
786.
seen. So
But
we're,
it's
you know, we're
it's
looking at those
crushing
things.
right
We
towards it
also
right
continue
now.
to expect, and I can
All right. All right, we know what it is, Chair Pal. We know what's going on now. We know what's going on. You're just gonna print more money, and then we buy more BTC. That's what's happening. Hi, hey girl. Ooh, what's going on? Hi. They just brought me a little snack. Oh my gosh. Oh my gosh. I just got hooked up. Wow. I got all the drinks. I'm a drinky person, so they hooked me up with some drinks to put in my fridge. So awesome. Wow, guys, we're going right up to the 786 here. This is crazy. This is crazy, guys. We were not, I mean, I don't know if we weren't expecting this, to be honest. We were feeling really bearish, and now this thing is pumping right now. This thing is pumping. This thing is pumping. Look at this. Wow. Let's hope we don't get a massive dump here, because that was a big move. That was a big move. Okay, let's see how many people are still watching across all platforms. We have 86 people still watching on X. Man, you guys are awesome. If you would do me a favor and just hit the heart on the actual live stream and repost it, so then it blasts it out to all your peoples, all your peeps that are your followers. Shout out to the people that are watching on Twitch and also on YouTube. Thank you so much. All right, let's see. Guys, we gotta get in a trade. What is going on here? We missed the opportunity. We're too busy just trying to get our live streams going and do this, and we're missing the opportunities right now. We didn't think we thought the market was gonna keep going down, but it's actually pumping right now. So, woo. All right, so let's not miss the opportunities. Let's not miss the opportunities here, because Bitcoin just went up 3% in the past hour. Went back up 3% in the past hour, guys. Wow. Wow. Wow, wow, wow. Man, it's crazy. Guys, let me know how you're feeling right now. How are you feeling? Put a 1 if you're still bullish, or if you're bearish. If you're bearish, put a 2. If you're bullish, put a 1. All right, guys. We're gonna end this thing. We're gonna end this thing because we're gonna hit the markets here. We're gonna look at this thing. We're gonna make some moves. We're going to make some moves. Hopefully, I mean, we should have made them down here. It would have been nice to make them down here. Would have been nice to make them down here instead of right here, because now we're possibly in muddy waters here. We're in muddy waters here, guys. Well, this is what happens when you feel the FOMO. When you feel the FOMO. But now that BTC's done this, the altcoins will soon follow suit. So maybe we have some altcoin opportunities. All right, guys. Thank you so much for being in the live stream. We did this emergency quick FOMC live stream. I think it was our first one that we've done in this type of way. So thank you so much for joining me on this live stream to get this info. And I'm on the channel at 8 p.m. Eastern Standard Time today. And tomorrow, we have a special guest coming on the live stream. We're going to be doing it a little bit earlier so we can make sure we can get this person on the live stream at a good timely manner. So we tomorrow are going to be live streaming, not at 11:30. We're going to be live streaming at 10 a.m., guys. So make sure you remember that we're going to be live streaming at 10 a.m. tomorrow, a little bit earlier. So make sure you guys stick around for that, and you will not be disappointed. Can't tell you who it is, and it's going to be a surprise, but it'd be cool if you guys want to maybe make some guesses in the chat right now who the guest will be. Let me know. I'll see you on the next one.